Good morning. Good morning, everybody. Morning, Chris, Shadow, Benton, Max. How y'all doing? So, today may be interesting. Morning, Steve, Mary. And the reason is we're at all-time high. And traditionally, I don't trade much at all-time high. Plus, it's the Wednesday before NFP. Could be very interesting. And the reason why I normally don't trade when we're in all-time highs is because I don't have targets. So like I said yesterday, I got to have a target. And unless if price comes down, but I mean, over the last few years, every time we've made new all-time highs, we just keep running. We just keep running long. Yeah, Max, I have reason, like if price comes down, that's the only way. If I see something very clear, so basically what I'm seeing here, let's see. We're going to have this opening range gap, right? Big opening range gap. We have the low here. Price opened right here. So that's going to be the high. And then I'll mark out the middle as usual. 364.25. Yeah, so let me go. So we had a minor sell side liquidity there. Go to the 15-minute chart because that's where I have it. We have, and that right here was these relatively equal lows. So there's some minor sell side. I wouldn't say that's a big time sell side, just some minor sell side there. They kind of over here we might have a little bit, but if you look, I marked out. So we have, when we have on the 15-minute chart, we have multiple gaps, fair value gaps here. Like right here, there's this little one here. The very next couple bars, another one there, and then another little one there. So that tells me that more than likely there's a higher time frame fair value gap. So I went up a time frame to the 1 hour, and sure enough, there was a 1 hour fair value gap right there. Let me mark this. Well, nah, let me not mark that one. So then from there, where do we have? So we have that, and then we have this little bit of smoothness down here if price did run down, which was that previous all-time high right here. Last month's high and the previous all-time high. So it could come back down here before running up. I've seen that happen before where it takes out the high, comes back down, kind of tests it, kind of accumulates a little bit more in that area and then goes up. Might not. And then yesterday's high was right here as well. So then basically what I'm doing is we have this low, right? And then now we have this high. So everything in between, like I said yesterday, I just kind of mark my fair value gaps on this 15-minute. So mark these, and then just kind of watch and see what price wants to do. So then if I go to the 1 hour, I just kind of want to see what the structure is looking like on the 1 hour. That's where I got this fair value gap. And then, of course, this big 15-minute gap has a 1 hour gap there as well. And then, of course, we have this run up from Monday. And this blue shaded line. So right now it's just, it's just running up. So when we took these highs here, right here, let me just mark a line right there. This high and this high. We took that on the 1 hour and we displaced through it, leaving a fair value gap, right? So that tells me it's likely to continue, which it did. And then it could come back down to it, and then that would be an area where you want to see if it inverts or if it holds and goes up. If I go to the daily chart, we did get a fair value gap on the daily chart. See, this is why I was bullish overall. And I thought we could take this high, the not all-time high, last month's high. Because we were still in this huge fair value gap right here, right? And look, right here on this day, Wednesday, November 27th, We came right down to consequent encroachment, right at the middle. Right here, we didn't hit it. We got very close, did all this, rebalanced this volume imbalance. We had a fair value gap going down, a SIBI here. It just rebalanced it, came back, touched the middle here, and then now it's closed up. Used this as an inversion, which this is the one I'm talking about right here. Use that as an inversion. And it's just heading up. I mean, it's bullish. And then left this as we took this high. Let me get rid of this. As we took this this high, this was a swing high, right? Pull down. As we took this high, again, displaced, left a fair value gap. So that tells me we're going to be bullish. How far up it goes before pulling back into this fair value gap, not sure, because there's nothing up there. It's all-time high, right? So that's kind of why I don't really trade all-time high very much. I mean, there is reasons where if I see a nice market structure shift and a move down where I could take it to the low-hanging fruit first target. So, and then here's another thing to note. In those fair value gaps, here is a potential. This bar is still open. So this is a potential imbalance right here, right? And if this bar closes up, it'd be a volume imbalance on the daily. So potentially, price could, before this day closes, want to eliminate this imbalance and not leave it. I've seen that happen sometime, but it's not something you want to count on, but it's just you want to kind of monitor that and see if price wants to not allow this imbalance to remain there. So just something to watch. So that's kind of what I'm looking at, and I'm just going to kind of wait and see how we took this minor sell side. That is actually the London high right below it as well. Took it here. If it reaches back down here, maybe not. It may go, right to the middle of the opening range gap first. Again, all-time high leaves a lot of uncertainty. Look at price action. Yeah, because there is some red folder news. We do have NFP in a couple days. So, just kind of a pre-trade warning here. I am very open to not taking a trade today, and I won't push my time either. If there's looking like there's nothing and we get close to 10:20, 10:30, I'm not going to force anything today, tomorrow, and Friday. And actually, I need to double check my calendar. I may not be streaming Friday. We'll see. Let's see. Let me pull up. Our red folder news for today. I mean, we have quite a bit of it. We had 8:15. Here, let me just pull this over right quick. We had some 8:15 news. We got 9:45, 10 a.m. Oil inventories don't really do much. And then Powell speaking at 1:45. So, yeah. This is not a day you want to push anything. As far as, it's got to be very clear what I'm seeing. We do have our new day opening gaps right around the 323, 324 area. Let's see if I go to my new, that's the new week opening gap. We do have those down there, but they're a little older. The new day opening gap chart right here, where 324. So let's see what's down there. That would be going through this 1 hour fair value gap, and I'm not very convinced just yet that we would go through that. We may dig into it, hit the middle of the opening range gap. Not quite sure that we just go through it. So, but you never know with the news. Could see something. This bar, 937. Let's see where our first presented fair value gap is. Here is the opening bar. And then that may be our first one right here. Price just reached up into it right there. So we have, I'm going to mark this just to view, for viewing purposes. We have this fair value gap on the 5 minute. Right there. We took this sell side liquidity. So basically we broke market structure right here. And then we left this 5 minute fair value gap. We did reach back up into it right at the open, right here. And drop. So that's going to be interesting to see if that carries us down at all. Just going to leave that there so I can monitor that one in case price does come up. Morning, Abel. So yeah, yesterday we had a great week, right? So yesterday we had a great win. I had a nice one. That was a really nice win. Monday, of course, right after the stream, as I was signing off, it wasn't a huge win. It was like 27 points. So 2 days, 2 nice profitable days on NFP week. I'll take that. Even if that's all I get, I'll take that. And, you know, the day that I realized I don't have to take a trade every day, I mean, that helped a lot. Because it's so easy to say, especially with prop firms, you know, you got to meet certain day requirements, profit requirements, you know, these things. So it's like, I got to get a trade. So Apex going to daily payout requests, to me, that was just huge because now I don't have to meet a certain trade day requirement before, making a request. So that helped. You don't have to worry about missing a day and waiting 2 more weeks. Where's ICT? I know. He needs to jump on my stream. I'm waiting for you, ICT. If you watch one day, I'm going to show you I'm the prodigy. I'm just kidding. I'm just kidding. Nowhere near. Still learning. Learning a lot. Very humble. Yes, Max. Apex requires 8 trading days, but what I'm talking about is the request, like, you don't have that request period, right? So remember before it was the 1st through 5th and then the 15th through 20th. That's what I was referring to. Yeah, as long as you have your 8 days, which in the beginning, I never get my profit within 8 days. But, you know, once you build your accounts up, that's why you're able to, 2 things I highly recommend if nobody's ever heard me say any of this. Okay, news is out. Let's see what news does. But 2 things I highly recommend. When you get to payout, do not request a lot. If you plan to continue to take consistent payouts, I only take 1,000 out per payout per account because then by the time I get another 8 trading days, I typically will have my profit amount needed. And then you can literally request every 8 days. And then, like I said, if it just so happens that there's a day that you don't need to trade or it's not a good day or whatever, you don't feel bad because now you just wait for the next day versus missing a window and waiting 2 weeks. All right. That 9:45 news came out, just gave us a little spike. This is that 9:45 bar, and notice here, let me highlight the bar. Notice how here's the body. We have a wick and a wick, and basically the same size wick on each side. So like that's not telling me anything. It's telling me, because I really focused on studying the wicks because, man, a lot of the wicks, ICT always says the wicks do the damage and the bodies tell the story, right? But you can see a lot of the psychology in the market when you see how the wicks and the bodies are working. And this wick right here is when I say nothing, because usually the wicks are telling me something, but whenever a wick tells me nothing, then I know the market is indecisive. Like the bar closed up, but we have equal size wicks on each side. And then this wick is the one that reached up right here. This wick reached up into this one a little bit. So I'm always seeing where's price reaching and where's price closing. Like that's huge to me. Where's it reaching? Where's it closing? Because that tells me if the market's trying to manipulate in certain areas. So like if I'm expecting, not today because this all-time high range and all that, but normally, if I'm expecting a short and I'm like, yeah, we have some really, really good sell side liquidity or really good reason price is going to run short, and I start seeing those manipulation wicks up, reaching up, bodies closing down, reaching up, I'm like, oh, yeah, it's going to go. And then when I do get in my short, I feel super confident. And then any more reaching up doesn't bother me. Like yesterday, that trade, a lot of people, and maybe even anybody, if y'all ended up taking the trade or not, I don't know. But that trade can make a lot of people nervous because after I got in it, it reached back up. But, like I said, there's certain areas where I'm expecting that it could reach back up to, but it shouldn't go back above. So that's why reading the wicks, it gives me like extreme confidence in my where the market's going to go. So, and that's kind of what I've been trying to work on a lot too, is making sure my setups, my entries that I get in are higher probability. Because even if you just kind of, ICT concepts are so good where even if you kind of blindly get in random stuff, there's a good chance you're still going to make 20, 30, 40 points out of it. Even without knowing a lot of the framework and details. Yeah, I mentioned that, Chris. We have 10 a.m. news and then Powell speaking at 1:45 when I pulled over the Forex Factory news chart there. So, yeah, just can't forget that. I'm not too worried about Powell, but because I won't be on. But the market, if it's anticipating something, then it can get kind of stagnant. So, yeah, you know what I'm going to start doing? When we have these news, I am going to, so everybody watching, including myself, don't forget. Make that nice and big right there. So yeah, that's what I think I'm gonna start doing that when we have red folder, orange news in our way. I'll just throw it on the chart right there so we don't forget, because you get caught on the wrong side of news. And a lot of times, and I've noticed, it's been said that news, all it is just a driver to make the market do what it should have done anyways, just faster, right? But it can cause overshooting. The wicks can be wickier. So you can't have sometimes a normal stop if 10 a.m. news is about to hit and my stop normally would have been here and everything looks good. You can't just, it could wick down because a lot of it's going to be manipulation, right? So yeah, Max, we got to help each other out here. Yeah, because I know a lot of people, they even y'all on the chat here y'all might not just trade the time that I trade, Yeah, and there's a lot of people that trade longer, so that's always a good reminder. Yeah, 950 now. There's nothing. I'm not seeing anything that I'm liking. Like I said, the only thing that I'd really be comfortable in is if the market truly showed its hand in going short. But there's nothing showing me that we are going to go short. As of now, this would be like a minor sell side liquidity. But it's nothing I'm convinced in. And then with this wick reaching down here, body closing up above sell side that minor sell side liquidity, this would be a wick that I'm watching right here. And I want to see the mean threshold, the middle of this wick right here. That's an area. That's what I'll be watching. If we can never get under this, I'm not taking a short. And then there's that 5-minute fair value gap. So if price comes down, because right now on the 5-minute, we are in a potential bearish move where price had a bit of a market structure shift here. We have this fair value gap. If we invert this, or if this does not get stay respected, then we're going to go long. Hey, that news indicator was awesome from the sniper charts. That was, man, I wish there was something like that, similar, because it is nice just having news right there on your chart with the times, the colors to tell you the importance. So tapped the 5-minute fair value gap right here. Now, if price does go higher, and obviously there's no targets, right? So that's when you could draw out your deviations. Have your deviations. Do I still have that? There we go. Where those are targets. So one deviation is basically this same amount of a move down. If price goes above this high, this one deviation is that same amount going up. Normally, it will go up to at least the half if it does go up. If you have no target, there's nothing. Normally, it'll at least go to the half. So each one could be a target. It could be where you take some partials. So that's how I would look at that if price went up. I'm not at the point where I'm taking trades like that. I just don't have enough. I guess you could say I don't have enough confidence because yeah, I'm just not there. No reason, no excuse. I'm just not there. So I'd rather, at the moment, not take a trade than do that. So it's still, we have about 5 minutes left to the news, but yeah. Because if this gets inverted and we do leave a fair value gap in here, somewhere on this 5, then yeah, we could just be headed up. So I'm gonna kind of leave it right here for now on the 5-minute, just to see this how it wants to react here. And look at this. Let's see. Let's see. Let's test this because what did I say about price never just stops in the middle of nowhere for no reason, right? Well, look at this wick right here. Look in the middle. Mean threshold of that wick. We got right above it. And turned around. Which is actually the low of this one. So the low of this one, the body closed right there at it, which is just about the middle of that wick. All right, let's see. Price reached up. It hasn't closed in there. Reached up in the upper half. No potential fair value gap on the long side. We have about 3.5 minutes. If this area holds, then yeah, we might see it run down. Get rid of this for... But remember, this fib right here is that 15-minute wick. Right here. And you see how this 930, it's all fractal, right? So this 930 bar reached up, reached down, closed here. Go to the 1 minute, see what's happening. And also, if I did think about a short, I mean, I got to see some nice displacement. Like, it's got to be obvious. Can't be all this back and forth, wicking. Like, it's got to be very obvious. We have a volume imbalance way up here that never got touched. Could be easily missed, but look at this one right there. I'd be curious if price is gonna shoot up and take that out. And I'd be seeing, like, right here, it's reaching down right back to the first presented fair value gap 1 minute before news. This could be manipulating a move down to shoot it up. So you can't get tricked into thinking price is going to actually go short yet. Well, Chris, I'm looking at this one because this is the most obvious. This wick already came up to here. So above that, there's no more. You have this. I wouldn't even really, that's not very obvious, and that might not even be 1 point or 1 tick. So this right here stands out, very obvious. So you got to remember, if the wick went through it, then I'm not looking at that because the volume imbalance is one of the weakest PD arrays. Hold on. Look how it's bouncing right off this 15-minute mean threshold of the wick right here. Look at that. Okay, it's pushing through. It hit it perfectly and bounced off. Look how it reached right into here, right at the middle, and shooting down. Yeah, that's the one I was talking about, Chris. This right here, that's very little. That's like very little. That doesn't. This one is a nice volume imbalance right here. This is like a tick. So you got the close of this bar is 452. The open of this bar is 451.75. That's literally one tick. Like I don't care about that one. Especially when we have one right above it that's larger. Open of this bar, 454. The close of this bar. What's for? Yeah, I mean, still, this is two ticks. But it's just, to the eye, this one stands out to me. So I always look at what stands out to me. So yeah, so like here, we had this fair value gap where this 5 minute was. Bodies closed right around the midpoint of it. Price came down, reached up into this 5 minute, reached down. Rejected off this 5 minute. Reached right up into this fair value gap. Shot down, but that's not, that's not one I would even consider taking. This was like a minute before news, and it's not, the market's not showing its hand to me yet. Let's go back to the 15-minute chart here. This very well could be manipulation, right? We still have 12 minutes for this bar to close, but this is why I want to read this wick. If we cannot close below the midpoint of it, or anywhere near, or show that price wants to move any further from this, I'm not looking at a short. Especially if the body stays right up here around where this first presented fair value gap is, and these bodies are closing right here. Right? Like manipulation, knock everybody out. Let's hit some stops. Let's get some liquidity. And then run up through this high. Potentially. Don't know yet. But just because history tells me when we're an all-time high, it typically keeps running high, running long. Because a lot of people's, especially like, retail mentality is, how high? It can't just keep going higher and higher and higher. And everybody just keeps kind of trying to short it. It's at all-time high. And then it just keeps going up, 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 up. That's why I actually can't remember the last time I traded an all-time high day. Let's see what ES is doing. That big volume imbalance on ES right here. That stood out right away. ES pushed lower. Look at all this. I mean, this is the 1 minute chart, but we got a lot of like little sell side liquidity just ripped right through. Look at the 15-minute chart. Yeah. Let's go to YM. Kind of looking the same. So they're fairly correlated. So this is where, if we believe price is going to go long, this is where you can start looking for a long. This is an obvious volume imbalance. Right here. We may, if this bar closes up, which it looks like it will, so where you'd get a fair value gap right here, right at the first presented fair value gap. Invert this one. So I'd look for this to get inverted. And if price holds in here, long, right up into this 5 minute, you have this little one here as well, but I think we're going to go right up all the way up to this high. That's why it's important to mark those wicks like that too. You don't want to get caught in manipulation. And see, price just running up. It could just rip right up through. It may not even come back down to here. It's just volume coming in. Take everybody out going down. Volume coming in, you know, up here. Rip right up through these highs, through this volume imbalance. You see, let's go back to that 15-minute chart. Look at that. Easy reading. Like, and reading the market, you got to remember too, reading the market is not just for taking trades, right? Reading the market is also to read to know when not to take a trade. Like, you know, that's why it's important. You can't just get too fixated on one time frame, one setup, not seeing the entire framework. Guarantee you, a lot of people are getting crushed today. I mean, they just are. You can tell, especially when you can see the wicks like this. You have all that manipulation going on. I mean, there's a lot of blown accounts going on. Michael, my trading did a complete 180. And I'm not going to say it's because just ICT is so far superior, right, over the Apex sniper system. I think both, people can be successful with both. To me, it's whatever you're comfortable in doing. So like, hold on real quick. Reach down into this one. This is where you know, okay, guys, so I'm going to say this now. I'm likely 95% chance not taking a trade, right? But you can still read the market. This is where you learn for the next time. And so you see this. That's what I'm telling you. Price is going to go rip right up through this volume imbalance because we had that manipulation down. We came up, volume imbalance, volume fair value gap here, breakaway fair value gap. We never reached back into here, inverted this. Now we left this fair value gap. Price reached right back in, closed up, took these highs. Price should not come back down to this 1 minute fair value gap. So let's say you did long somewhere in here, right? Now your stop, you can have your stop right up under this one. And then we may get even a little fair value gap here. We took this high, so this will potentially be an order block. And if so, and you'll know that by price coming back down into this order block, and you want to see price not close below this midpoint here. And once that happens, and then it reaches back up even further, then it should not come back here, and then you can move your stop up even higher. And just it's a way to trail based on these PD arrays, right? So let's see what happens here. Price should not come back below this midpoint right here. It'll probably tap it and go. So let's see what happens. And then look at this wick, how this wick reached down. I can watch this wick as well in case if it overshoots a little bit. But it should not trade back below this 1 minute fair value gap right here. This is where I'd feel comfortable now. That price, we have 20 seconds. It's just going to, once this bar closes, it should rip up. Got 4, 3, 2, 1. Let's see if it rips up now. I'm telling you, man. I'm telling y'all. See, that's why, for me, I've learned how to read ICT. And that's why, for me, my trading flipped 180 when I went to ICT and really learned this stuff. Because, man, you just can't deny that it works. I don't care. That's why I keep saying to everybody all this. And you know how many people came out to me and were like, man, ICT is a scam. He's a fraud. He's this, he's that, he's that. Why'd you go to there? And I'm like, man, because what I'm seeing, I can't deny. I just can't deny it. So like, why would I do anything else? So, and for me, I didn't take a trade today, right? But this right here is just as good as me taking a trade because it confirms everything. If you get to the point where you're reading like this, whether you take a trade or not, it doesn't matter, because when you do take a trade and you have the same reads going on and things are happening, that's just as good as taking a trade. So, yeah, I mean, it is what it is. It's crazy. And that's why my trading, when I switched to ICT, I still had a lot of ups and downs, right? But once I locked in, and I was just like, you know what, man, I'm gonna do this. And I say it all the time. I got a notepad. I highlight it. It's like I was going to school, going to college. I don't care. I'm gonna make this happen. I put in so much work, so much time, sleepless nights almost, because I'm like, I want to get good at this, and I want to be great at reading it, right? Because if I see other people do it, if I see ICT do it, why can't I? Why can't y'all? Why can't anybody? It's just the time, right? The chart time. So that's when, after that, it started getting payout after payout after payout. So, hey, this was a great stream though. And I encourage a lot of y'all to rewatch them. And then whenever you're not trading, like even if you're like, let's say you're learning ICT, and watch the chart. Don't click a button. Just watch it and just start seeing how price reacts to all this stuff. How do you join ICT? So you don't join ICT. Here's another thing, y'all. Man, I can't. When I started learning ICT, let me give you a little golden nugget here. If you go to his YouTube channel, he has playlists. ICT mentorship 2020, or I think it starts 2016. His core content. He has a 2022 mentorship, 2023, and now he has 2024. If you just start watching his videos, you'll be all over the place. You'll be like, oh my God, there's so much information. He's all over the place. He talks a lot. You see so many things like that. My recommendation is start on the 2022 mentorship, okay? And just start on video 1 and watch that entire mentorship. There's like 44 videos. Focus there. And then if you go to his 2016, let me pull it up actually. Because I'm not taking a trade, y'all. That was my framework. That was the move right there. I didn't get an entry. Whatever. I don't care. So, hold on. Let me just put all my stuff in Global Sim, because I always do that to make sure there's no accidents. And if anybody feels like sticking on here for a little bit, I'm just gonna show you the way I think you should study ICT, and then we'll hop off here. Global Sim. Okay, cool. We're good. No accidents can happen now. Let me pull up YouTube. Let me go to his channel right quick. And by me doing this, I'm doing this also because when I first started studying ICT, because of everything I just said, you start seeing some other people teaching ICT. And this is a big reason why I don't want to teach ICT. You start seeing other people teaching it. And then I started seeing a lot of people, even though they looked like they knew what they were talking about and sounded like it, they had some things like a little bit wrong compared to what ICT would say. So then I said, you know what? I'm cut off everybody other than ICT, and I'm only going to learn from ICT's channel. That was just me. And I I actually do recommend doing that. Once you really know ICT, then maybe, you can hop and see some other opinions and things like that. But that would be my suggestion as well. So hold on. I got his channel coming up here real quick. Where are you, ICT? I always forget if it's the inner circle trader or inner circle trader. Ba, 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 ba. Okay, hold on. Sorry, taking a second here. Yeah, it's the inner circle trader. All right, so let me bring it over. Okay. Here's his channel. Okay? Right there in the chat. Here's his channel. Go to playlists. Here's where he has his playlists. All his playlists. His core content. Month 4, I believe. Let's check it out. I think it's this one. Your future is at your. I don't want that. Yeah, month 4. He explains his PD arrays individually. What's an order block? What's a mitigation block? What's a breaker block? Rejection block. This is the one playlist outside of 2022 I would recommend. Chris, I don't want to pay for premium. All right, don't distract me. This is the one playlist I would recommend going through because he explains each one of these in detail, right? Each one, so that way you know what's an order block, what's a mitigation block, what's a breaker block. You want to identify those, okay? After you've done that, then head over to his 2022 mentorship, wherever it is. 2022 mentorship, view full playlist, like 40-something videos, okay? And study that. Focus on that 100%. 100%. Focus on it. Go through it multiple times, in and out. You don't need anything else. Anything else. Once you're very, very good at that, then probably go to his 2024 because there's a lot of great stuff. That would be my recommendation. So. Yeah. That's what I would do. So anyways, I think this was a really good stream for learning purposes. And if you're Chris, you'll practice. Yeah. Chris, don't be Chris. I'm just kidding. It's funny because anytime Chris says anything to me, I'm like, Chris, study. Chris, watch a video. Chris, watch a video, Chris. My buddy. All right, y'all. It is 10:18, so I am going to hop off here. No trade, I told y'all. I'm going to be very cautious. And hold on. Let me check before we go. Let me check the news for tomorrow. I think we do have some news, but it's literally the day before NFP. So I likely am not going to trade tomorrow. And I don't think I'm going to trade Friday, but I'll make a post on my YouTube, on the post section in the community area, whether or not if I'm going to trade or not or stream. There's a good chance I won't. So if I don't, I'll see you guys tomorrow. I plan on putting a video out today, a little bit later, on some of the things that people have asked me about. So, but yeah. All right, y'all. Definitely appreciate everybody being on stream today. Hope you learned something. Hope we all have a great day. And be cautious. If you're going to continue trading, be cautious these next couple days. So, as always, trade well, everybody.